be going over IRS Form 8606, non-deductible IRAs. Before we get into the form itself, I'd like to talk a little bit about how this form can help you when it comes to your backdoor Roth conversion strategy. Sometimes when people contribute to a non-deductible IRA and then later on try to do Roth conversions, they can fall afoul of some of the rules that are in place regarding Roth conversions. Most notably, the rule about prorating IRA conversions from non-deductible or after-tax and pre-tax IRAs. So, for example, if you have an IRA that's got $50,000 of pre-tax money and contributions in it, and you've got $50,000 of non-deductible contributions in it for a total of $100,000, and you do a $10,000 Roth conversion, you would have to pay taxes on the 50% of that account balance that was considered pre-tax money. So this form helps taxpayers understand and keep track of the basis that they might have in their traditional IRAs. So if you want to learn more about how pre-tax IRAs work or backdoor Roth conversions, you can go to our website, teachmepersonalfinance.com, go to the search bar, type in Roth conversions, and we've got an entire series of articles that talk about Roth conversions and Roth IRAs. So on to the form. There are three parts to this form. I'll briefly outline each part and then we'll start again from the top. So part one is non-deductible contributions to traditional IRAs and distributions from traditional SEP and simple IRAs. So anything that was a after-tax contribution to a traditional IRA, as well as any distributions from any traditional SEP or simple IRA. On the back of this form, or on page 2, are part 2 and part 3. So part 2 of the form is anything that contains Roth conversions. So from a traditional SEP or simple IRA to a Roth IRA. And then finally part 3, distributions from Roth IRAs. So there is a good chance while you're completing this form, you might find you only need to complete certain parts of it. So let's go back to the top and we'll go through this form step by step. At the very top of this form, you'll see the name and address fields. Your tax preparation software will most likely catch all of these, automatically populate these fields. So your name, your social security number, and then the address information is only required if you're filing this form by itself, not with your tax return. Most of the time, this form does accompany an income tax return, so you probably won't find yourself needing to complete the address fields. So in part 1, you only need to complete this part if one of the following apply. Either you made a non-deductible contribution to a traditional IRA for the year. This might happen because you have an employer-sponsored, or your spouse might have an employer-sponsored retirement plan, an ERISA plan such as a 401k or 403b, and is an active participant in that plan, and you exceed certain income limits. If you took traditional SEP or simple IRA distributions in the tax year and you made non-deductible contributions to a traditional IRA, so for this purpose, rollovers do not count as a distribution unless it's a repayment of a qualified disaster distribution. Qualified charitable distributions are not considered in this. A one-time distribution to fund an HSA, Roth conversions, recharacterization, none of those are considered to be a distribution. And finally, if you converted part but not all of your traditional SEP or simple IRAs to a Roth IRA, and you made non-deductible contributions to a traditional IRA. So we'll start with line 1. You'll enter your non-deductible contributions to traditional IRAs for the tax year. In this case, we're completing this form for 2022. So you will enter your non-deductible contributions all the way through April 18th of 2023. As you know, you can contribute to an IRA, either Roth or traditional, all the way through the tax filing deadline of a year. So you can make a Roth or traditional IRA contribution in 2023 for the 2022 tax year. So you'll enter your total basis in traditional IRAs in line 2. There's a little bit more guidance in the instruction, but basically you'll be going back to previous years' 8606 forms to enter your basis. If you need help reconstructing your basis, that would be a good conversation to have with a tax accountant in your area. So add lines 1 and 2 and enter that total into line 3. So then, before you answer any other questions, it will ask you, did you take a distribution or make a Roth conversion in the tax year? If not, then you simply take the amount from line 3 and carry it all the way down to line 14, which is almost at the bottom of the tax form, not quite. If you did take a distribution, then you're going to have to go through the rest of the part 1, starting with line 4. So in line 4, you'll enter the contributions that you included on line 1 that were made from January 1st through the tax filing deadline of the following tax year. So in this case, for the 2022 tax season, you would include all those contributions made through the filing deadline in the calendar year 2023. You'll subtract line 4 from line 3, and that result will go into line 5. In line 6, you'll enter the value of all of your traditional SEP and simple IRAs as of the end of the calendar year. So December 31st of 2022, plus any outstanding rollovers. So sometimes this happens with rollovers that happen towards the end of the calendar year, where money has left, say, a 401k account that you decided to roll over into a traditional IRA. You'll consider the money that has come out of the 401k but has not yet landed in the traditional IRA. You'll subtract certain repayments of qualified disaster distributions if there are any that apply. You would be filing IRS Form 8915F, and you can follow the instructions if that applies to you. In line 7, you'll enter the distributions from your traditional SEP or simple IRAs in the tax year. Do not include rollovers. Do not include qualified charitable distributions, also known as QCDs. Do not include any distribution to fund an HSA, Roth conversions, or recharacterizations. So enter the net amount in line 8 that you converted from a traditional SEP or simple IRA into a Roth IRA in the tax year. This is also the same number that will go into line 16 when we start going into detail about Roth conversion amounts. And then on line 9, you'll add line 6, line 7, and line 8, come up with the total. And then on line 10, you will divide the value that's in line 5 by the value that's in line 9. Basically, they're trying to help you calculate for the pro rata rule purposes. So if 50 given the previous example, you go through the math on all of this and you would end up with somewhere around 50% as the result for an account that previously had 50% pre-tax and 50% post-tax contributions. In line 11, multiply line 8 by line 9. So this is the net amount that you converted multiplied by the decimal value in line 10. This is the non-taxable portion of your Roth conversion. This is the same number that you'll enter into line 17. For line 12, you'll multiply line 7 by line 10, and this is the non-taxable part of your distributions that you did not convert to a Roth IRA. So if you had distributions that were not necessarily Roth conversions, then this will be a separate line item for the distribution that you did not pay tax on. And then in line 13, you'll combine lines 11 and 12, the total of your non-taxable Roth conversions and your non-taxable distributions. The total in line 13 is the non-taxable portion of all of your distributions. You'll subtract line 13 from line 3. This is the adjustment to your basis in traditional IRAs. And then you'll subtract line 12 from line 7 to get to the amount in line 15A. So in line 15B, you'll enter any amount that might be attributable to qualified disaster distributions. This number, if it's above 0, will also go into your 8515 form. Line 18 is applicable. So you'll subtract line 15B from line 15A. For a lot of people, for most people that don't have qualified disaster distributions, 15C will be identical to line 15A. If this amount is more than 0, you'll also include this amount on your 1040, 1040 SR, or 1040 NR on line 4B. You might be subject to an additional 10% tax on line 15 if you were under 59.5 at the time of distribution and you don't qualify for any of the exceptions for early withdrawal rules. So if you think that might apply to you, you can see the instructions to understand exactly which exceptions there are. There's a variety of early withdrawal exceptions that can help you avoid an early withdrawal penalty. In part 2, you're going to take most of this information from parts that you entered in part 1. So you only need to complete this part if you did any conversions, any Roth conversions in the tax year. So if you didn't do Roth conversions, you'll be skipping this. So in line 16, enter the amount from line 8. If you didn't complete part 1, then enter the net amount that you converted from traditional SEP and simple IRAs to a Roth IRA. And then if you completed part 1 in line 17, you'll enter the amount from line 11. If not, then you'll enter your basis in the amount that was on line 16, and you can refer to the form instructions for more detail. Most taxpayers completing this form will carry these values down from part 1 that they just completed. And then the taxable amount of your Roth conversion is simply the difference between line 17 and line 16. And if this amount is more than 0, then you'll include this on your tax return, your Form 1040, whichever version you use, on line 4B. Part 3 is distributions from Roth IRAs. You only have to complete part 3 if you took a distribution from a Roth IRA in the tax year. So again, for this purpose, does not include a rollover other than a repayment of a qualified disaster distribution, does not include qualified charitable distributions, distributions to fund an HSA, recharacterizations, or return of certain contributions. Only distributions from your Roth IRA. So in line 19, you'll enter the total non-qualified distributions in the tax year. This includes any qualified first-time homebuyer distributions, any qualified disaster distributions from your Form 8915F. In line 20, you'll enter any amount that you used for qualified first-time homebuyer expenses. However, this number cannot exceed $10,000. That is the limit that you can put onto this form for a first-time homebuyer expense. You'll subtract line 20 from line 19, and if this number is 0 or less, then you'll enter 0. In line 22, you'll enter your basis in Roth contributions. You should see the instructions on how you determine this number, but more likely than not, this will carry over from previous tax returns. If the line 21 amount is 0, you'll stop here. If not, then you'll go to line 23 and subtract line 22 from line 21. If this number is 0 or less, then you'll enter 0. You'll skip lines 24 and 25 and complete the form. If it's more than 0, then you might be subject to additional tax. In line 24, you'll enter your basis in Roth conversions from traditional SEP and simple IRAs, as well as rollovers from qualified retirement plans into a Roth IRA. And then on line 25A, you'll subtract line 24 from line 23. If this number is 0 or less, then you'll skip the rest of the form. If this number is still positive, you'll go to line 25B. You'll enter the amount on line 25A that might be attributable to qualified disaster distributions, if any, from your Form 8915F. You'll also enter this amount on your 8915F line 19 if this applies. Subtract the difference and enter that number into line 25C. If this amount is more than 0, then you should also include this on your 2022 1040, 1040SR, or 1040NR on line 4B. This represents the taxable amount of your Roth IRA distribution. And again, at the bottom is a signature form. You'll sign this under penalty of perjury, that this information is complete and accurate to the best of your knowledge. If you're using a paid tax preparer, then their information will go in the signature block. When you review this, you'll want to ensure that you have complete information from the firm that's doing your tax return, specifically their PTIN, which is their unique identifier that represents that tax professional, and then the firm's employee identification number. If you have any questions, please go to our website. We've written a complete guide to Form 8606. Simply type IRS Form 8606 in the search bar on our website, and you'll come to our article. If you have any questions, please let me know. Otherwise, hope you enjoy this, and please subscribe if you haven't already. Thank you very much.